This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
In the digital age, you would think that things should be becoming easier when it comes to retirement and financial planning. But I feel like every time we turn around, thanks to technology, there's something else we need to consider. There's just more and more on our plates.
There's a lot out there to learn and to be educated on for sure.
Yeah. Well, working
and it's always changing.
Yeah, that's right. Working to help educate people, empower you with information and knowledge. Obviously, a lot of folks have questions about recent headlines, as we always do. I mean, in the digital age and in the age of 24-hour news cycles. But since the start of the year, we can't deny that there's just been a lot of sudden international conflict that none of us were anticipating. And so the geopolitical tensions overseas, of course, they're raising economic concerns for us. The question always is, Abe, what does it mean for me? What do I need to be thinking about? CNBC talked to JP Morgan Chase CEO Jamie Dimon. After the U.S. and Israel attacked Iran, he is keeping his eye on inflation. This is Jamie Dimon.
I think there's some risk, more inflation than people think, and that could be like a skunk in a party if that ever happens. Hopefully it doesn't happen, and no one actually knows. But this right now will increase gas prices a little bit. And again, if it's not prolonged, there's not going to be a major inflationary hit. Again, if it went on for a long time, that would be different.
Hopefully it won't. Hopefully it's something that we'll see resolve itself pretty soon. When you're designing plans, Abe, in the office, do you build in room for surprise? And also, how often do you find that you need to stress test the various plans that you build at Abich Financial?
Yeah, good questions. Absolutely, we plan in room for surprise shocks because
they happen.
These things internationally happen all the time, and they happen at home. The surprises happen at home too in retirement, not just when you're working. And then how often do we stress test the plan? Well, we typically meet with most of our clients quarterly. And so we are making sure that, their desired allocation and plan is still meeting their needs at least every 90 days.
Okay.
But in terms of someone who doesn't have a plan, here at Abich Financial, we think that you should stop wondering and start planning. There's so much you can control. Mm-hmm. There's so much out of your control that you could worry about. I mean, if you're watching the news cycles all the time and online and just watching all the events, you could easily just start worrying that things could spin out of your control. But you know what? There's so much you can't control there, right? So why wouldn't you then instead focus on what you can control? And that's what we help people here with at Abich Financial, day in and day out. When it comes to all this geopolitical tension and economic concerns, again, so much out of our control. I think you've got to have patience. Look, we had this stuff going on last year with tariff volatility, and the markets were resilient and bounced back, took a hit, bounced back. And it's time in the market and just kind of knowing that this stuff is going to continue to happen. All of these events, whether at home or abroad, are going to continue to happen. And we need a plan in place for the good times and bad. When the times are good, they're great, right? Markets are up 15, 20+%, whatever it is. Mm-hmm. Not a lot of worry. When the markets are down, we need to expect that. When there's choppiness and volatility, we need to anticipate it as being healthy and normal. This almost always happens every single year, at least for some amount of time, right?
Right.
But believing that in the stock market and that in our long-term plan, we can succeed if we pay attention and focus on our long-term plan, most importantly.
Yeah.
We just helped a couple out of Sterling, Virginia, not too far from our headquarters in Ashburn, about $4.3 million saved. Government employees retiring in 24 months or less. In fact, wife is already retired and the husband is just hanging on because he loves what he does, a few years younger and retiring soon.
Okay.
And, of course, there is some concern with what's going on internationally and how that could impact the retirement plan. And it is, I'll tell you, it can be very daunting for people, Heather, that don't have a retirement plan to stop the consistent working paychecks and then to start thinking and actually act on consistent paychecks from their life savings.
Yeah.
It's the opposite of everything most Americans have ever done for that first 30 to 40 years, getting up to like 60 years old, right?
Right.
You're telling me I got to start taking money out in the middle of a war?
Right.
And paycheck, my guaranteed paycheck that I got in my bank account at, Bank of America or wherever, it's going to end. Uh-huh. And I got to produce that from my portfolio. Most people can't even comprehend that. They knew how to save in their 401k and TSP, sock it away, max out those accounts, get the matching contributions, and watch those accounts grow. And it's really nice when the markets are up and those balances continue to go up. But this is actually what we saved all this money for. Okay. You just need a new plan, right? So just because that plan, that growth plan helped you get to retirement and sock all that money away and get to 4.3 million like this couple in Sterling, doesn't mean that same plan is going to help you get through retirement. If you're just focused on growth, you got it all wrong, right? Mm-hmm. Because we want to turn that growth into income. We want to be able to enjoy the money in our best years before it's too late. And so we've got to turn that phase one, what we call phase one plan, into a phase two plan. 4.3 million, along with pensions, Social Security, rental income, just a wonderful job of being diligent and prudent to get to the point where really they can almost do whatever they want to do. They put together what we call a phase two plan, and one of the things that really helped them to understand kind of where they were from an investment standpoint was a portfolio x-ray of the TSP, the 401k, the IRAs, the brokerage accounts, all the accounts that they had between husband and wife, put them together into risk reports showing them all the ups and downs, pros and cons of how they're currently invested, side by side how they should be invested from this point forward as they really are going to fully retire in 24 months or less. All that was done through the portfolio x-ray was really valuable for them and showed them how they could make that change from pure growth to growth and income. So if you're 55 years old and older, you save $500,000 or more in investable assets, you would like a portfolio x-ray. You would like to know if you can retire. You would like to have as much confidence as possible as you transition into what we call phase two. Pick up the phone right now. For the next 5 callers and others, we want to offer you the same portfolio x-ray and analysis on your 401k, TSP, IRAs, all of it. Complimentary.
Abe, we talk all the time about the folks that you guys help here all around the greater DC metro area. Folks that have worked so hard, they've saved $1 million, they've saved $2 million, sometimes $5 or $10 million. Sure. Now, think about the billionaires of the world, because talk about next level. And when people think of billionaires, a lot of us might assume, well, they're a billionaire. They've got a whole team of people. They've got a squad that handles everything from accountants to financial experts to stock investors. They never look at a bill. Well, take into consideration one of the world's most famous billionaires, Oprah Winfrey, because she is here to set the record straight.
My thing is sign every check. I still do. And also show up for all the financial meetings, whether you know what they're talking about or not. Yeah. I still see all the invoices. It makes me ill to have found mistakes. But I think if you don't, then you're just sort of floating and you don't have any idea of how things operate, how things really run, what things really cost, what it costs to be you. Because there's a price to be you. And nobody else knows what that is. And the person who really should know is the person who's in charge.
That's some convicting words right there from Mrs. Winfrey, Abe. What does it cost to be you? You need to know when somebody comes in to see you. How often do you see somebody really knows their true, quote, cost to be them over a 20 to 30 year retirement? And maybe this is what you kind of go with the core of what you do, what you help folks figure out.
Yeah, most people really don't, because this is a brand new phase, a brand new season of life for most people. And you know why this matters. I mean, inflation, longevity, rising healthcare, all of these things can eat away at your retirement, at your life savings. You need protection against inflation. You need income flexibility. You need to have support in case of a healthcare crisis.
Right.
You might want legacy planning too, and to pass dollars on to the people that are most important. Right. You need a flexible plan. I mean, because people still need that growth, but they need protection all in one plan. And that's possible. Mm-hmm. We help people with it every single day, and we've helped well over 1,000 families across the DC metro area and across the country to retire with dignity and confidence.
Yeah.
We just helped a lady out of Rockville, Maryland, about $2 million saved, single, about 64 years old, really retiring within about 12 months.
Okay.
Had that accumulation, or has the accumulation of about $2 million, but didn't have a retirement plan. And pretty healthy, kind of concerned about running out of money. I mean, that's retirees or pre-retirees' biggest fear is that you're going to retire and they're going to start living their retirement life. They're going to start to draw down on their portfolio too much or spend too much, or the markets are going to hit their portfolio.
Yeah.
Healthcare events going to hit the portfolio, and they're going to run out of money for some reason by 85 years old, by 90 years old, and they're still going to be alive. This lady was wanting to get a better understanding of what retirement really costs. I mean, she had several meetings with her, and she finally drilled in and kind of nailed down what her budget was. It was about $7,500 a month. You know, expenses don't disappear in retirement. They shift.
Yeah.
So while work-related costs may decline, healthcare, home maintenance, travel, hobbies often increase, especially early in retirement. We call that the go-go years. That's going to happen for this lady. Healthcare is a major blind spot. She wanted to kind of know, not being able yet to hop on Medicare, kind of what healthcare costs she'd be looking at and should be considering. And then again, making this money last. I mean, a healthy 65-year-old, which she is, may need to fund 30 or more years of retirement, which magnifies the impact of underestimated expenses. It's so important to have a really good understanding as much as possible as to everything you're going to come across in what we call phase 2.
Yeah.
And that's what this lady was concerned with the most. And in addition to that, just having no retirement plan put together. A $2 million 401k, a $2 million TSP, a collection of accounts totaling $2 million or $5 million or $10 million, whatever it is not a retirement plan. We talk about this almost every week on this show. As people come in with a lot of money saved and they're scared to death because they have no clue what to do. They don't have a plan put together to make this money last, enjoy the money, and really protect and cover themselves from all these risks that can foul up a great savings plan. So the main thing that helped this lady out in Rockville, Maryland, was to put together a retirement roadmap. Just bring all the resources together, consolidate, streamline, answer all of her questions, really have a good idea. And then once she had a really good idea and was educated on all these moving pieces for this new phase of her life, she pulled the trigger and became an Abish Financial client. And that was after several meetings and a lot of education.
Okay.
If you are also looking for that same retirement roadmap that helped this lady in Rockville, Maryland, we want to offer that to you as well, complimentary. To the next 5 callers and other, that'll be complimentary, that retirement roadmap. If you're 55 and older, you've saved $500,000 or more in investable assets that we can help you with. We want to offer you the same retirement roadmap, complimentary.
So you work for 30 or 40 years, and during that time, if you're invested in the market, you're what's considered a long-term investor. And then you might be in retirement for another 30 years, Abe. So this is where it gets confusing for a lot of us, because why would we not be considered a long-term investor at that point? And does our investment philosophy need to change?
Right. So, Heather, I think we are still considered long-term investors even into retirement because, we could, if we retire at 60 or 65, we could live to 90 or 95. So you want to focus on a long-term plan. However, the whole mindset and the whole plan needs to change, right? Because when you were working, you were focused on growing, right? You were working and you didn't need income from your nest egg. Now you do. So that whole plan needs to change from what we call phase 1 to phase 2, growth to growth and income. That's maybe pure stocks or a lot of stocks in your early years to stocks and bonds or stocks and annuities or whatever it is to kind of lower the risk and bring in the reins a little bit when you fully retire. I wrote a book on this, The Retirement Mountain. You talk about, where all the climbing accidents happen on a mountain climb, not on the climb up. On the descent down. 80% of retirement mountain climbing accidents happen on the descent, on the way down. So, and if you think about it, it makes sense. Like, look at all the risks that can mess up a wonderful job of saving, right? When we're working, well, the paycheck's still coming in. If the markets are down 20% at 40 years old, 45, 50, not too big of a deal. Buying opportunity, right?
Right.
As you near retirement, market volatility, ongoing inflation can make the road ahead feel precarious. But reacting to short-term turbulence with long-term portfolio changes can be a costly misstep. Remove emotion. Instead, it can pay to prepare your portfolio for retirement by slowly switching your investments to lower risk options. We just helped a couple out of Herndon, Virginia, $4 million saved. We put together a retirement income plan for them. We consolidated all of their accounts together. They were really looking for a fiduciary retirement planning firm to work with to build a retirement plan. This was a former consultant at a big consulting firm in the area, knows money, knows accounting, knows dollars, knows math, knew how to save it, lots of resources, didn't know how to put it all together, package it, consolidate it, and build out a retirement income plan for he and his wife that could last them, that they could have confidence into their 90s, and then also pass dollars on to their kids and grandkids. We helped put that together for them, a retirement income plan. It's very simple, but very powerful. It's something to follow, measure, and track. If you were going to a new restaurant or a new location somewhere across the DC metro area or anywhere in the country, a new location you've never been to, more than likely you'd put GPS into your car.
Not only that,
you can follow
you'd have read
directions.
the menu, you'd have picked out what you're going to eat. You're
Everything.
so right. And that's just dinner out.
So how could you go just willy-nilly into the next 30 years, 40 years of your life? How could you go into the next 30 to 40 years of your lives without directions, without instruction, without something to follow? How do we even know how well or bad we're doing without something to test and analyze?
Yep.
Instead, be proactive, put together that retirement plan that you know you need. And if you have that phase 1 growth-focused plan, that probably needs to change to a phase 2 growth and income plan where you're building in protection, and it's a retirement plan that is giving you permission to spend, permission to enjoy the hard-earned dollars you've just worked 40 years to build. We here at Abish Financial help our clients with that every single day. If you're 55 years old and older, you say $500,000 or more in investable assets we can help you manage, then pick up the phone right now. We want to offer you the same retirement income plan that we offer to this couple in Herndon, Virginia, complimentary.
Abe and his team, they are here to help you do that. So it's theretirementkey.com to start the conversation, or you can just click on the links we've got posted in the show notes.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit theretirementkey.com and join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.